You're listening to Energy Insiders, a weekly update on clean energy and climate policy with Renew Economy's editor Giles Parkinson and leading energy analyst David Leach. Energy Insiders is brought to you by Evergen, providing cutting-edge energy management software for battery optimisation, virtual power plants and distributed energy resources. And Pylon, helping solar installers and retailers design high-resolution solar proposals in minutes.
Hello and welcome to this latest episode of the Energy Insiders podcast. My name is Giles Parkinson. I'm the editor-in-chief of Renew Economy and editor of its EV-focused sister site, The Driven. And joining me as usual is ITK Principal David Leach. David, I trust you're well.
Giles, I'm well, and trust all the 90,000 people that wandered across the bridge today in fairly tropical, wild conditions. All seem to have survived it okay.
I was there, David. It was very wet, and there's a shitload more people than 90,000 people, let me tell you.
Well, that was the police estimate. I always find estimates very hard. But whatever, there were lots of people, very significant protest, and as Bob Carr said, it'd go around the world. But we are here to talk about electricity and stuff, and we've got a great guest, haven't we, Giles, this week?
Yes, look, it's another battery story, David, and we got to talk just after the day after the Australian Clean Energy Summit last week. We got to talk with Nick Carter, who is the chief executive of Acacia Energy. Now, Acacia Energy, you may remember, kind of came out of nowhere, mostly out of Macquarie and Tesla, but it was a new company that won the contract to build the Waratah super battery, Australia's most powerful battery and possibly the most powerful battery in the world, which will act as some sort of giant shock absorber for the grid, and was commissioned by New South Wales to help fill the gap created by the assumed retirement of Eraring, which has been put back by 2 years. But anyway, we're going to have a listen to Nick Carter. There's a lot of other battery storage news, so we'll come back after that interview and discuss some of the other news around the place. But David, let's have a listen to our conversation with Nick Carter first. Nick Carter from Acacia Energy. Welcome to the Energy Insiders podcast.
Thank you very much, Giles, for having us along.
I've been looking forward to this because I've been fascinated by the Waratah super battery. That's your first big battery that you're building in New South Wales, the site of the old Munmora coal-fired power station. It's the biggest in so many ways. It's going to be the first battery in Australia to 1,000 megawatt hours, I think. It's going to be 850 megawatts and 1,650 megawatt hours or something, which makes it, at least for the moment, the biggest battery of any type in Australia and the most powerful unit of any type to be connected to the Australian grid. But when the contract was first announced a few years ago, people were going, well, hang on, who's Acacia Energy? And hang on, who's powering? And people were going to go, what the heck's going on here? You came out of nowhere to snatch the biggest contract ever awarded in Australia. So you better start from the beginning and tell us who Acacia is, how it got set up, and how and why you won that contract. Get a bit of first battery. Let's build the biggest one.
Absolutely. So, yeah, sure, Giles. And actually, before I start, I just wanted to thank yourself and David for this podcast. Obviously, been a big fan for a long time, and it's a really important part of the energy transition, having this forum to communicate. So thank you very much for that. If I go back in some history, Acacia was started about 4 years ago now. I was at Macquarie working on battery projects there for 3 years prior during the COVID times, which was pretty interesting time to be developing batteries, and then kind of saw the light in terms of what an opportunity it was in Australia, in the NEM, and globally for that matter, trying to get battery storage projects up. We started with a very small group of people. A couple of them came across from Macquarie, which was Tim O'Sullivan and Andrew Wegman. We then got more people, Tony Fullerlove, who's an industry veteran on the development side. We then had Nick Finch on engineering, Pan Galanis. The whole team started to form. We only had actually 5 people, I think it was, Giles, at that point, including Ferry Hamori. And that was the team that we started doing some consulting initially for a large Japanese company called JERA. They really helped us get moving. We did consulting. We developed a pipeline of projects, most of which are still on, in the hopper today, and we can talk about them more. And then really after probably about 8 or 12 months of doing that, the Waratah Super Battery expression of interest came out. I think it was around April in 22, I think it was. And we just decided that we should throw our hat in the ring. And at the same time, we'd started talking to BlackRock and a few others. And so we effectively, literally cobbled together a response for that EOI with our 5-person band, and with some logos on the front cover, managed to get into the next round. And
the logos wild.
That's right. And from that point, we really dug quite deep. And I think it sort of sounds odd, but with a very small group of dedicated people that are representing each of the kind of areas, finance through to energy market modeling, through to engineering and delivery and development and asset management, you can do a lot. You can do a lot with 5 or 6 people. And we had a lot of support from other companies like Consolidated Power Projects, which is our EPC provider. Wilson's Transformers were heavily involved at that stage. Local manufacturer.
Did you aim low when in your pricing?
No, we didn't. We aimed at what we needed to do to get a good return on the project. And at the end of the day, I think what got us through that process in the end, and I think roughly we beat sort of 35 or 40 different bidders in that process, was the feedback we had was the technical solution that was offered was superior. And I think what that partially means is the way we approached designing and delivering the whole asset. So remember, at the time you could bid for half the SIP service or the full SIP service, and we ended up submitting both 2 designs, 2 complete projects for each. And by offering that full system, it was a big deal and a good solution. Obviously, we can talk about power and more because they were critical to that full solution as well.
Well, let's talk about this construction, because you're in commissioning now, and I think you're about to get to the next key phase and poised for an announcement sometime soon. But it's been an eventful construction phase, as they often are. I mean, it is the biggest battery and the biggest unit, as we said, to be ever connected to the grid. You had weather problems, you had washouts and floods and things like that. You had the inevitable commissioning problems, which comes from a new player in the market and something of that size. And then you had your battery supply go bankrupt in the middle of it all.
There's been a lot of challenges. We knew, to be honest, we knew that this was going to be very hard. As you've stated, the single biggest connection point by megawatt, we think it's still the largest or most powerful battery in the world. All of those things, it takes a huge amount of capital. It takes a huge amount of working capital for any OEM to and other suppliers, frankly, as well, to supply such a large asset. So pretty much everything that could happen, as you said, happened. But as you may have heard Minister Sharp talk about at the ACES conference this week, we've got through the interim COD on that project now. So half of the SIP service is there. As you've said, we're still doing the whole point testing for the remaining portion of the plant, and that's all on track at the moment. And the full COD will be later this year, and that's in spite of having grown the team from those 5 people that we were just talking about, or 6 people, up to about 210, and attracting over $3 billion of capital in that time.
Let's just talk about because Waratah is great, but you're also building Arana, Alinda, Brendale, as far as I can see, commissioning. That's a total, when you include Waratah, of something close to 4 gigawatt hours or something like that of construction, which is $6 billion worth of capital. I'm just plucking a number out of the air.
Yeah, it's probably a bit less than that, but you're in the right ballpark. But yeah, it's 1.6 gigawatts with respect to those first 4 projects, and about 4 gigawatt hours. So that's right. So it's a lot of capital.
And I want to move on to how you sell all that capacity in a moment, because you're not aligned with a major gentailer, which is interesting in itself. But before we get there, just on the financing, you raised, I think, what was it, $600 or $700 million of debt in the last 12 months? Is that right?
Yeah, look, it's probably closer now to a bill. And roughly, we've attracted around 2 or a little bit more of equity and over $1 billion of debt so far.
Yes. Oh, so tell me a little bit more about the equity, because the last thing I saw about that was a year or so ago, you'd had an equity round of financing and it hadn't actually gone anywhere, because at that stage, according to the Financial Review, which would be the last to know anything about what's actually happening in renewable energy, batteries were still new in the space. But how is the equity scene for batteries at the moment, and what have you actually been doing?
Well, as you mentioned, we had a tranche of initial equity through the purchase arrangement of Acacia. So that was the first piece. And then from there, BlackRock has continued to fund equity into the business to fund those projects, and then incrementally we've pulled in project level finance for each of the projects, and that will continue basically throughout the next 12 months to finish off those projects and bring the next pipeline through. So it is a combination of project level debt and continued equity as well.
And do you expect to raise equity from outside sources, to bring in fresh equity partners? Is that a long-term ambition?
It is. I think obviously you reach some natural limits with respect to how much leverage you can have at the portfolio level, and so that has to occur at some point in the future as well. Now,
one of the things is that when you got all these batteries with different off-takers. Well, let's talk about the offtake, and I don't know how you best want to think about it, but one of the things I think about at the bigger scale is that batteries can be very competitive in the peak power market. I know batteries and I know batteries serve a lot of functions in the market and do a lot of things, but if every battery goes to a different off-taker, you're kind of throwing away your advantage, at least as the operator, aren't you? I mean, I'm just trying to understand this. You're still getting your building skill and your ability to develop at low cost and site and all of that side of things. You're getting your economy of scale, but on the revenue side, are you still getting that?
Yeah, so that's a great question, David, and I think maybe I'll just go back a step as well to what is our fundamental business model, because I think it's really important to answer this question. We effectively consider ourselves a build-own operator of assets, meaning we do everything from the energy market modelling in-house, the simulation of how the battery is going to be autonomously bid or traded, and all of that happens up front, all of the finance, whether it's debt and equity, delivery, development, engineering, offtake. We've got a big commercial team led by Paul Curnow doing that. And then we've got the asset management team managing the asset for its life. And then we've actually got a repurposing or a repowering model as well. So that's our model. So what that
have you got a rewilding bit? Sorry, keep going.
Oh yeah,
I'll distract you. I'll distract you.
Remediation piece as well. But during that process, what that allows us to do is take a view, which is the majority of our assets at the moment with the offtake, and we can go through those 4 that you mentioned. Each one is still traded and bid by Acacia. So we're the participant. We're the ones that have a trading team. We manage that asset, whether it's through bidding or whether it's the asset management itself for life. What that means is that each of our projects, the 4 that you mentioned, are all merchant batteries. However, they've got different layered offtakes on top. So we're still running them in the market. So if you take the 4, obviously Waratah's got the SIPs contract with Transgrid, and what that means is that, at any given point, the SIPs may be, let's say, 700 megawatts, and the battery is 850. Well, there's 150 worth of overbuild or excess capacity, and we continue to trade that in the merchant market, and that changes through the season, for example.
And that respect of that and the other batteries, like often the frequency control revenue is in the, milliseconds type of thing. And you can offer that service for yourself into the market, no matter what else you're doing with the battery and who else has contracted it.
That's right. And I think the nuance there, of course, is with FCAS, due to the depth of those markets. You're not offering, for example, 700 or 800 megawatts of FCAS. It's always much smaller portions. So, that 150 does allow you to participate in a decent amount of the FCAS market. Then, if you look at the two projects we have in Queensland, which is Yalinda Park, which is a Powin project, it's effectively a very small version of Waratah. It's 155 megawatts. And the other Tesla Megapack project we have at Brendale in Brisbane, both of those projects have a capacity swap. And what that means is it's a pretty simple product, really, is that we're, again, participating merchant and we get paid for that. And then we just net off a portion of it. We get a fixed price, a contract price, and we give them effectively a floating, merchant portion for their bit. And that's, a lot of people find that very attractive. The two off-takers there are Yalinda Park is a company called RE2, which is some of the folk that used to work at Nafilla. Nafilla is a weather derivatives sort of trading company, and that's what RE2 are now doing. So they've got offtake on that. And then Gunvor is the other one that's an off-taker on Brendale.
Yeah, that's a name I've never heard of. What are they going to do with their? Is that just a financial thing for them, or do they have some deeper idea?
I think at the moment they're effectively acting like a trading house of sorts, and that they'll be using that capacity for their own book in Australia as they build it up. And so that's their play. And then the last project is Arana, which is quite interesting as well, which is at the Wellington substation, which I think you had one of your guests on recently with another competing battery at the same substation, which is great. But our battery there is a 415 megawatt 4 hour, which makes it one of the biggest 4 hours or one of the biggest batteries in the world, let alone Australia. That's a Tesla project again. That has a very interesting set of use cases. So again, we trade and bid it as a merchant asset, but it's got the LTESA floor contract sitting there, which is great. That helps us a lot with respect to finance and the debt that we brought into that project. But then the other part of it is this virtual tolling agreement, or VTA, we call it, with Energy Australia. So that's a really innovative, interesting product, because they can then use that as, it's a virtual 200 megawatt generator that lasts 4 hours for them, and they send notional bids to us, and we absorb them into our trading strategy, and that works very well for them. So that's kind of a broad brush.
So they essentially, from a financial perspective, control the dispatch and the charging of in that contract. Can they tell you? Yeah, and you trade it as you like, but that's kind of separate to the contract. And from the point of view of EA, it's effectively like an old style physical capacity contract where you'll just maintain the asset and they operate it.
Correct. And the other nuance here, which a lot of people are now discovering, is that the accounting treatment for that product on, in this case, EA's book, is really important. And the VTA product allows them to treat it in a way that is favourable in terms of tax treatment as well.
Believe it or not, I don't know about tax, Nick, but I wrote it up from an accounting perspective that of these PPAs, they're not actually leases. The accounting industry has decided, in the most part, that interests about 1/4% of our audience, so I won't spend too much time on it. And I'm going to hand back to Giles. So I'll just, you mentioned used a mixture of suppliers. And so I suppose you're in a good position to talk about how competitive the industry is at the supply side and what are the cost trends, coming out of the Chinese driven suppliers and also Tesla, of course, and cell sizes and pack sizes and stuff we've discussed a little bit on this, because I think just looking in the NEM, I was looking at Renew Maps numbers, always a great source. There's about 12 gigawatts now of under construction, commissioning and operating batteries, 28 gigawatt hours. That's enough to operate the whole NEM or half the NEM for over an hour. But anyway, what's happening in the cost? It's not enough still, I suppose. So I'm interested in what's going on with cost trends and stuff and, competition and stuff.
I think what I can say is, going back to the origin story as well, is that, great timing to start Acacia, because as soon as we did, the lithium carbonate price went to the highest level ever in history. And as a result, batteries kind of went up in price 5x in 2 weeks. And that was not great. When we signed Waratah, it was still pretty high, the lithium carbonate price. So compared to now, where it's, much, much cheaper, the price of storage now, if you just look at it on a hardware basis and maybe even look at it on a sort of AC coupled basis, meaning that, the end of the inverter, you're probably looking at 3 to 4x reduction since that time. So things are getting...
I've got an installed number of like about 650 Aussie a megawatt hour.
Yeah, and I think that's broadly ballpark. I think it's actually cheaper than that now. So it's been a pretty big reduction. I think what we're seeing generally in the market is, obviously you've got this global trend now, which is a lot of the Chinese cell manufacturers have branched out over the last sort of 24 months into building modules and then building packs, which they're kind of already doing for a lot of their automotive EV suppliers anyway. So they've got the know-how and the skills to do it. Then they've started integrating them into 20-foot containers. And so we've got this sort of flood around the world of somewhere between 5 and 6 or 5 and 6.5 megawatt hour 20-foot containers.
They must weigh a bit, mustn't they? Sorry, I keep interrupting.
No, that's a very good point, is that there is a natural ceiling actually to that model. In Australia, you're kind of looking at it, once you get up into the 40 to 50 ton per box, it actually becomes impractical to ship because, we actually try to take care of our roads a little bit compared to other countries, which means we've got a weight limit. So it becomes, that is actually a real consideration, is the mass of these boxes is starting to get very, very close or above the limit for that amount of energy. But that market is incredibly competitive. So people around the world purchasing those 5 or 6 megawatt hour Chinese boxes, you're really getting down in the kind of, well below 100 US dollars per kilowatt hour, probably 60s or 70s or 80s, depending on the market. Obviously, that's not a complete system. You got to get the inverters and build the site and everything else. But that's getting really competitive. But to your point, you've still got, we're still using, as you've seen, a lot of Tesla projects as well. And, that's a Tesla, with respect to the Megapack, it's a great product. It's fully integrated. It works. It's reliable. It gets serviced, over time. The commercial side, which people often forget about, because I used to work at Tesla as well in the very early days of Hornsdale, etc., is that it's matured a lot around the bankability of that contract. The terms and conditions over time have really come a long way. So that's a very good solution as an overall package. Obviously, you've got other players like SunGrow who provide a competing product to the Megapack with the Power Titan, which is another great product. And then we've got, in our case, the Powen stuff. And going back to the story at the start, Powen were not only did we have a great arrangement and partnership with them, but, they did produce a lot of megawatt hours in a very short space of time to get Waratah going. And there weren't that many OEMs at the time that could actually commit to doing that. And that's kind of a function of their supply chain model, which was to have everything contract manufactured. So unlike Tesla or SunGrow, for example, that own their own factories around the world. Powen didn't have a factory. They outsourced it to others to provide. And you kind of go, is that a pro or a con? It ended up being a pro because they had two independent supply chains with two independent factories and two independent cell suppliers for that. And that worked really well in the context of, shipping costs and other issues that were happening around the world with cell supply, etc. Even back then at Waratah, it sounds slightly bizarre now. The total site is, 1.6, 1.7 gigawatt hours. Just to produce that amount of cells back in 2022, 23 was challenging even for the biggest cell suppliers. So we actually ended up having a number of two cell suppliers for Waratah.
It's interesting about Powen though, because they've gone now. So how are you going to go with the maintenance and the upkeep and things like that? And I noticed from your LinkedIn feed that you looked like you were standing outside the front door of Powen as the executives were let go, and you were signing them all up. So
yeah, so that was a pretty interesting and stressful journey. We obviously had been working with Powen for a very long time, so we knew them very well. And, I think the reality is that a few things happen. One is that building big batteries takes a lot of money. And if you're a supplier, that's hard. Every supplier, including Tesla and others, struggle with this, which is you sign a contract, you might get some initial payment, milestone payment for that. Then you've got to start procuring material, and then you've got to start building it. And a lot of that, you might be getting some incremental milestones, but that's all on your, that's
it's an age-old business rule that cash flow problems arise during rapid expansion because you don't get paid till the end.
Correct. And that's the first thing, which is a fact of life for all battery OEMs and integrators. The second thing, of course, is President Trump and the big, beautiful bill and all of those things that basically meant that for a period of time, it's recovering now, but for a period of time, basically no one was willing to sign up to buying a battery in the States. So if you're a US-based battery provider like Powen is and Tesla is, and Fluence to some extent, that's a hard place to be getting your cash flow from. So that didn't help. And those things combined together to really put them into a difficult cash flow position. And then, as you're saying, Giles, we had a close relationship, so we kind of knew where they were, what was happening. Obviously, we're still caught slightly off guard, but I think a credit to the whole Acacia team, that, Paul Kerno's commercial team, etc., Brooke, our GC, we just managed to adapt very, very quickly. And again, being agile company, which we still try to be, we managed to pivot. We did hire a lot of people. We actually managed to get a big chunk of their software team, hardware team, but also the Australian Powen crew as well that are in the middle of obviously commissioning Waratah and Yalinda Park. So yeah, we got 20 or 30% increase in headcount in the space of sort of 2 to 3 weeks. And a credit to the team, somehow we managed to get continuing through the commissioning and the whole point testing on those projects without an interruption, which is amazing. But we are actually now acting as, we're self-performing basically for those systems, meaning we're responsible for all the asset management, we're responsible for the commissioning, we're responsible for the integration to the Hitachi PCSs. All of that sits on our shoulders now.
So I'd like to know more about this, sort of the way this SIPs work. I mean, it's been described as a God, I can't think of the word now. A
shock absorber for the New South Wales.
Yes, exactly. My mind went blank there. And you're about to sort of impose that contract. And you were sort of saying when I talked to you at the Clean Energy Summit too, that this is going to be a model going forward, because there's still, and people call them shock absorbers, they call them SIPs contracts, they call them virtual transmission. It's basically a way to allow a transmission line to operate at greater capacity or at its rated capacity, so there doesn't have to be any sort of contingency plans. So it's a fascinating one with Waratah too. So you're basically sort of switching on, you're basically sitting in the background there, ready to sort of jump in case there's any sort of disturbances, but there's always contracts with other sort of wind and solar farms. I don't want to sort of spend too much time going into it, but if you can just give a quick overview, because, just for people to understand exactly how it works and why it might work.
I think you've started to summarize it well there. Effectively, what it is if you think about in a simplistic way, the lines that come from, say, the Arana Res inland from Sydney across to the Sydney main, grid or ring, if you will, which is, Newcastle, Sydney, Wollongong, kind of 330 kV ring main grid there, which supplies a large amount of load. The issue, of course, is that you can't necessarily, under all conditions, evacuate all of the renewables from Arana down the existing double circuit line to that load center. And so one thing that you can do, which is what SIPS allows, is to run those lines harder. Because at the moment, of course, you would run them both up to their 50% rating. And when one line trips, the other one goes up to 100 and everyone's happy. But that means you can only ever evacuate a certain amount of power. So in order to get more, you might run them all up to, say, 80% on each line, for example, to get that wind and solar into Sydney. But that means if one of the lines trips, you got a problem because you're going to have to overload a single line for a period of time. And maybe that overloading actually leads to both lines tripping. And that would be bad because then all of a sudden New South Wales or Sydney doesn't have load. And I'm not trying to do TransGrid's job here, but that's the kind of problems they're dealing with. So what SIPS is doing, as you said, it's sitting there on standby. Both lines will get run harder under certain conditions. When one of them trips, the paired generation at the other end, and I think you wrote an article about this the other day where two assets were simultaneously ramped down as the Waratah super battery came up to then be able to maintain that second line from tripping off, basically, and keeping the power system stable while TransGrid would reconfigure the network in a certain way to, either get that second line back up or reconfigure things, and obviously in conjunction with AEMO, get the system stable back to a place. So it's all about evacuating more renewables.
Okay, and so what that part of it is sitting on empty? Is it sitting halfway? Well, it wouldn't be sitting on empty, I guess. It'd be
no. Well, it's
actually doing when it's resting it for that contract.
Yeah. So in a very simplistic way, it's not quite as simple as this because it changes its shape over the course of the day, but it also changes during season. So we've got summer versus winter.
That's a sculptured contract thing. So
correct. It is a sculpted service, but in a very, very simplistic way, in the middle of the day, for example, in a certain time of year, if the SIPS requirement was 700 megawatts, it has to do it for 2 hours. So that's 1,400 megawatt hours. So in that scenario, the battery would be at quite high state of charge. We'd still have that 150 merchant that we described before, chipping away there. And then we would be preserving that. In the afternoon, as the service sculpting kicks in, we get more released into the merchant market, and we might be trading 300 or 400 megawatts instead of only the 150. So that's why our trading team and our autonomous bidding supplier, which is Fluence Digital for that product, are kept very busy and have had to do a lot of work to make all of that hang together.
So what are the possibilities then for more contracts like these? Because there's been a call for them. I mean, Squadron and WindLab are putting out virtual transmission for the Southwest Zone, which we've talked a lot about on this podcast, and presumably it could be applicable all across the state and the country.
I think so. I think what you should also just keep in mind is that the Victorian Big Battery, which was that Tesla project down there, that is effectively, it's not the same service, but it's also a network service which is trying to protect that interconnector between Victoria and New South Wales. And then if you go back even further in time, the Hornsdale battery, I mean, that's also a form of run-back SIPS style scheme, which is preserving a pretty big chunk of its power to step in, as you guys know very well, under certain circumstances. So, in my view, and there might be more actually, but those in my mind are the big three system integrity batteries so far. And I think in Australia, compared to the rest of the world with these types of schemes, we're way ahead. And I think, I personally think we do need to keep a focus on this. All transmission operators and state governments and federal government need to be thinking about ways that we can continue to leverage the current transmission network. Because as you guys know and keep saying on your podcast, there's no way we're going to build enough transmission in Australia. And I think if we can try to bridge that gap by having larger batteries offering these,
I think we can build extra circuits too myself. But anyway, this is not
but we need to do both. Though,
we do need to do both. I couldn't agree more. Now, I just wanted to come back to costs, because you talked about the container costs, and this is an issue that goes beyond batteries. But one of the themes is it's everything in Australia costs more once the product lands on the shore. You've taken some people on yourself specifically, but do we have enough of the skilled people to commission, I suppose, in the first instance, all the batteries that are coming on and prevent, like skilled labour escalation, as we might have seen in the LNG projects in Queensland or in the, offshore gas industry in West Australia, where, a few people very correctly say I'm very valuable just at the moment. What have you got for me?
Well, that's still ongoing, David. That hasn't changed. I think though overall, this topic is a real one. We made a decision. Well, as we've just said, we've gone from 5 or 6 people to 210 odd people. We've got part of that is the power and stuff that we just talked about. But even without that, we had achieved a pretty big growth. And the reality is that there aren't that many people in the Australian context that necessarily have 5 or 10 or 15 years of experience working on large-scale storage or whatever, because it hasn't existed that long. So
just on that, and just to spell it out a little more detail, what exactly skills, is it power engineers, electronics engineers? What skills go in for the highest value at the moment? Can I just ask?
Yeah, that's a good question. If we just think about internally inside Acacia, I would say it's grid modeling. So we've got a really big team of very skilled engineers that do a lot of our GPS work. That's super high value. I would then say the delivery team, so the people that have experience with a lot of different, whether it's thermal or renewable plants, that have then applied that knowledge to storage. So we've got a lot of people that have done a lot of big solar farms. In my view, yes, it's different, but it's not that different. So we can kind of repurpose that skill set. General engineering, and those engineers that we have that have got experience on high voltage transformers, designing substations, all of that stuff is really.
Isn't it great that we're building stuff in Australia, and engineers who must once have thought, I'm one of the smartest guys in the room, but no one wants me, and now they're in big demand, That's a pretty good thing.
It's good. I mean, that's right. And then really the other one, which people forget about a lot, is the asset management side of things. And a lot of our asset folk are from renewables, but a lot of them are actually from thermal as well. So we've got a lot of, my view was, and that's the beauty of Waratah being pretty close to the Hunter Valley, is that from my experience working on thermal generation as well, there's some really, really great technicians, engineers, and other people that are sitting still at, coal or gas-fired power stations in Australia. And, if you put a pitch to them or buy them a beer at the pub and go, hey, would you rather work on this thing over here? And they go, yeah, that sounds great. Then it's a good place to get people from. But David, to your point, I had a pretty big career shift at one point because I thought I was always going to be employed by Holden.
You were started at General Motors, didn't you?
I was in cars.
You were in cars, and I was going to ask if I didn't get a chance to ask, but when did the When did you get connected, if I can ask it that way?
It was pretty much seeing the writing on the wall and actually working on a lot of stuff at General Motors, Holden, as well as Toyota. And I could see exactly what was happening because I was supporting the government interaction or the government relations group. So I knew that the auto industry was going to collapse. And that was the time that I really started to try to pivot into electric vehicles initially, which I did. But then, got into the energy game about 15 years ago from being in the auto game for 15 years. So, I'm one of those repurposed, humble engineers, David.
So I was talking to someone, I think it was from Arup yesterday at the Clean Energy Conference, who mentioned that they made a decision internally about 2018 that they weren't going to do any more thermal energy or oil-related projects, and now they're the most popular place for young graduates. Because I think, there is a huge amount of talent in the thermal industry that probably is looking to move for one reason and another. It's just where the growth is, isn't it, really?
100%. That's right. So, we've got a lot of great people. I think on the, our partners side, so Consolidated Power Projects, for example, who build all of our assets, they're now about a 700 or 800 person company. They built, the Hornsdale Power Reserve, etc. They've grown 4 or 5x over the last sort of 5, 6, 7 years. And they find it hard to get high voltage electricians, engineers, and other people. So it's definitely a growth space at the moment.
So we want the engineers, the universities, to churn out a few more of grid modelling engineers. And that would help everyone along the journey.
Hey, just maybe one final question from me, because we're time to wrap up. Just the capacity investment scheme seems to be the flagship thing at the moment. You've got your Teslas, of course, in New South Wales. Expansion to that scheme. We're about to see changes post 2030 announced by Tim Nelson. What's your kind of views on the policy mechanisms or the market mechanisms to get more batteries done?
So we really like the CIS, the CIS. That's helped us finance a lot of projects, having that floor underwriting, and of course the LTESA, which was effectively the precursor that we discussed for the Arana battery. They're very, very helpful tools for debt. And in some cases, even just getting equity into the project. So that's worked really well. I think the Nelson review, obviously, we're all waiting for more detail. But I think one of the things that I think is positive is really looking at the tail, if you will, which is that the CIS might roll off after 10 or so years. But then, how do you kind of cover that tail risk? And I think the Nelson review is looking at that, which I think will be positive. So generally speaking, Giles, we're pretty happy at the moment the way things are progressing. New CIS, current CIS. Hopefully, there's some more SIPs style processes out there. I think the Nelson review, still waiting for the detail, but I think it's moving in the right direction in a few areas. We just need to make sure that it doesn't throttle back some of the more innovative offtakes that we discussed, like the VTA, because creating a mechanism that works with that kind of offtake is not straightforward. It's a non-trivial thing. So I think generally, Giles, we're very positive about the future and about the policy landscape for the next period of time.
Well, Nick, fascinating to talk to you. Great to have you on the podcast, and congratulations for your work so far. And look forward to seeing the rest of the Waratah battery roll out, and the other projects too, Linda Park and Arana, and presumably you've got a whole bunch more in your back pocket.
Yeah, there's a lot more coming. A lot of announcements to make. So the rest of this year is going to be very busy.
So just on that, I mean, we are seeing new projects every week, but you don't think you're done with announcements this year?
No, we got a lot more stuff to talk about across projects and financing. So stay tuned.
And that was Nick Carter, the Chief Executive of Acacia Energy. David, I thought it was a really interesting interview, and just to sort of top it off, a day after that, Transgrid announced formally that the first stage of the System Integrity Protection Scheme, the SIP scheme, which we call the shock absorber contract, came into effect. So half of it's up and running and going, and the rest of it presumably by the end of this year.
Well, I think the comment from Nick that caught my ear more than any other was this idea of having boatloads of battery containers for sailing around the world looking for somewhere to land. because no sooner had we concluded that interview with Nick, and I'd stupidly suggested that batteries were going for, $650 Aussie dollars a kilowatt hour, which they were earlier in the year. Then we saw AGL announce that Tomago battery, 2,000 megawatt hours, 2 gigawatt hours, 500 megawatts, so 500 megawatt 4-hour battery, which came in at $400 a megawatt hour. And then I've heard very reliable reports that quotes coming in for other people's batteries are still lower again, quite materially lower. So what I think's happening is that duration costs are going down. The inverters may not have dropped all that much in price. I don't really know. But what's very clear to me is that the cells, I can't say they've been given away, but I do think it's a buyer's market at the moment, very much so. And so, the cost of going from 2-hour to 4-hour batteries, whether it's residential or a utility scale, is very low. And so, people are going to load up on duration.
No, that's exactly right. And look, we actually heard from Wärtsilä. I doubt if that's the way you pronounce it, or Wärtsilä. This is the Finnish company which is supplying the batteries to the Eraring big battery, which will be the biggest, will overtake both those projects that we mentioned, Waratah and Tomago. And they have said, like Fluence, who won the contract for Waratah, they have both said that the US market has basically dried up because of the uncertainty, because of the Trump tariffs. And Wärtsilä was very clear, saying that means lower prices everywhere else, because basically, as Nick Carter said, there's going to be ships with batteries running around the place, and they're looking for markets. There's more competition, and sort of prices come down. So, look, that's interesting from Fluence. They did warn at their interim in May that there was going to, or earlier in May, that there was going to be $1 billion shortfall in their revenue. So this is their largest contract anywhere in the world to date, and they seem to be scoring a few goals. So it's not just Tesla.
No. The competition's very intense, and I no doubt if we could look within China, we'd see a lot of batteries getting installed there. But then China is installing a lot of everything. Saudi Arabia's installing, or the Middle East has seen a lot of batteries getting installed. So it is interesting. And on the other hand, we also saw the approval just yesterday, was it, of or FID, final investment decision, for Marinus link, taken by, somewhat controversially. Now, Giles, I don't know what you think about that. That's a 750 megawatts first stage, I do believe, and it's costing somewhere around 4 billion at the latest estimate.
5.
I saw a July 24 estimate of 4, but anyway, I'm not going to argue with a 5 billion, which is a lot of money, no doubt. And you can listen to people like Bruce Mountain, who has very articulate criticisms of it and always has. I think the idea of it, though, really, the basic idea of doing it, when all's said and done, is not so that Tasmania can import necessarily a lot of power from Victoria. It's really so it is the battery of the nation concept, where Tasmania will replace its own domestic production of energy, hydroelectricity, with hopefully a lot of more renewables, other renewables down there, principally wind, because in my opinion, you can develop onshore wind in Tasmania if we leave the environmental approvals to one side, just all that argument. Onshore Tasmania has fantastic wind resources, as good as offshore, as good as the Gippsland offshore. And so you can build a lot of very powerful onshore wind that's relatively attractive priced. That can supply Tasmania in the first instance, and Tasmania can use its hydro as a giant long duration sort of storage that it can ship to Victoria in the first instance. But, the electrons don't have to stop there. That will let Victoria supply other stuff. So that is the basic idea. We can argue till the cows come home about the economics and other stuff, but that's...
I remember, just the difference in the figures that we use, 4 billion, I think that was probably quite right. 5 billion it went up to because of the infrastructure, the transmission infrastructure that's needed in northern Tasmania to kind of connect that to the rest of the grid. But that be that it is may. Look, I remember writing a decade ago, and this argument about whether such a link would be it'd probably be more efficient to have battery storage either on either side of the island or in Victoria. That is an economic point. It's going to be a bit like Snowy. It's not going to be the most cost-effective thing at all. We'll probably be glad to have it once it's built, but it has created a huge amount of controversy. the decision by the caretaker government is pretty much unprecedented. It's not illegal, apparently, but it's pretty much unprecedented to go ahead with such a decision while they're in caretaker, and quite clearly now not going to get into government because everyone's so pissed off with them. And it's just fascinating, the debate that's going on in Tasmania about onshore wind as well. So that's going to be an interesting one.
I will point out that the fishers aren't going to complain about the underwater transmission. That's the one thing about it's going to be relatively easy, is the environmental side. You're not going to have a lot of angry sharks and fishers and whales and dolphins and stuff campaigning, arguing they need to be paid more to have the cable run past their shells.
Yeah, no, that's it. What was really interesting about it, I actually had a look at the Tasmanian government has not released the report that it commissioned and its assessment within the department. It still has not released that. Marinus Link did release a couple of independent reports. I had a look through those last week, and they're interesting. One they actually say is a bit like one of these things. It actually says that the economic value is increased because the green hydrogen industry has failed in Tasmania, so that means they're going to be exporting more. And the economics will be further boosted if there is a slow transition to renewables in the mainland, because the power sent from Tasmania will be replacing gas, more expensive gas, rather than sort of as cheap wind and solar. So look, all these ways to sort of slice and dice it. But as I said, look, it's probably not the smartest or the most economic choice, but once it's built, and it looks like it will be built, it will probably end up being useful. But I don't know what we need.
I think, to me, the point is it's not useful in itself. It's only useful if Tasmania then goes ahead and builds a whole lot of renewable energy so that the hydro can be used for other purposes. That's the only way that you can make the case. And that's what I think the environmental issue is, because there's all these people in Tasmania that don't want any development there, basically, like people everywhere. It's just they're more vocal in Tasmania than in some other places, but not that much more vocal, because as we know, no one wants any development anywhere, do they, Giles?
No, they don't. There was this acronym which I just heard at the CES conference. I can't remember it now. Was it
YIMBY and NIMBYs.
Oh, YIMBYs. And what's that?
Yes, in my backyard.
Oh, yes, in my backyard. I thought there was one who say don't build anything anywhere.
No, there'd be one of those as well. But I guess the YIMBYs are a reaction to the NIMBYs, and this is the other general point that was best made by one of the psychologists that we had on our show, that whenever you have a strong opinion, it will produce an equally opposite opposing opinion about anything. That's the way the world is.
That's the way of the world, and sometimes the way of this podcast. David, yes, and speaking about YIMBYs and NIMBYs, and back to AGL, by the way, they got approval with some of the renewables for the Pottinger Energy Park. That was one of those ones that was forced over to the Independent Planning Commission because it had 83 objections, 76 of which came from more than 50 kilometres away, and most of them interstate. 9 local submissions, all of them approved. So that's pretty interesting. So that's good.
Yeah,
So,
and 9 was probably the entire population in the area.
well, I think you're right. Probably all the landowners. And there's some other interesting things going around here too. AGL also signed, I was reading off here, AGL signed this virtual storage contract with NG, basically not specifying the battery, but just sort of saying there's this virtual sort of tolling agreement between the two of them. And I guess, David, that kind of means that with battery storage, we're just sort of delving even deeper into these sort of financial contracts, which are ever more complex and ever more flexible.
Well, the thing is, we're going to get lots of utility batteries. I think that's the very clear point. We're up to 13 gigawatts of, operating, under construction and commissioning in the national electricity market now already. And there's going to be more coming. That's still, I think, completely certain. So that, the odds, which I've always thought were pretty good, of a roaring closing in 2027, I'm sure there'll be doubts right up until the day it actually happens, but I'm still relatively confident that is going to happen. And on top of that, I think it's still the case that whether it's Pottinger, which is 700 or 800, 1,000 megawatts, depending on what stage we're up to and how much transmission there is this week, whether it's Valley of the Winds, whether it's Liverpool Range, whether it's Winterbourne in New England, which is also going to get into the IPC, I reckon, in a while. And once you get into the IPC, then it's only another 6 months till you get the go-ahead. I shouldn't say it, put it that way, but that is the way it's been working so far. So there's, you can see 4 gigawatts of wind I can count. That's probably likely to certainly 3 gigawatts. That'll probably, and I haven't mentioned Delta Yanko's project. That's another 1,000. There's still a lot of big wind projects, right? Not when I say lots of megawatts. It's before we used to get like 100 megawatt projects announced regularly, or 200 megawatts. But you need 5 or 6 of those to be one gigawatt project. And
Yeah, no, that's right. But David, I was really struck. I was quite surprised watching Lenny Kwong from Bloomberg NEF deliver last week. And we've heard of that, the huge queue going through commissioning, the huge queue going in connections and registration. You just mentioned the multiple gigawatts of stuff sort of queuing to start that process. But he made mention of the fact that not a single wind project has reached financial FID in the first half of 2025. What's going on there?
I think it's all just waiting now, myself a little bit, because as I say, these are big projects where you've just got to get more ducks in a row, I guess, is what I would say. I mean, we interviewed the CEO of Tilt, and it's going to be next year before Liverpool Range gets going. But I still think it's the fact that they are going to get built is coming more and more into focus. The certainty of it is growing. They won't be online in 2027, if that's your point. But I mean, projects are still, Golden Plains is still commissioning. I think, didn't we get a 1 or 2 wind farms? I can't remember, in Queensland. I think the still wind farms are still quite early in their commissioning. Tarong West is just about at FID stage there.
It's interesting. Yeah, there was another good graph actually in the Bloomberg presentation I was talking about, because we hear all about Trump just sort of trying to kill all wind and solar, but they've got this wonderful little graph about how, because so much is already locked in, there's all those wind and solar projects that will be built out to about 2028, when sort of Trump's term is ostensibly coming to an end, and then a big drop off, and then sort of like a rebuild after that. So, his war against renewables won't take effect for another 4 years in terms of sort of connected capacity. But that's kind of like the waves and the pulse of the way this sort of market works.
Yeah, and then we've already talked, I think, in our last podcast about the home batteries and how they're taking off. What was it in the first month? Like 13,000 or 16,000?
No, more than 20,000 have got to. That's more capacity in 20 days. There was a wonderful little thing that in 20 days, or 28 days, they installed more capacity than the original Hornsday battery, which took 100 days, of course, famously. But yeah, they're 1,400 a day now they're going through. It's just extraordinary.
And that just shows what the wonderful Australian behind-the-meter industry can do when it really gets its bit between its teeth, and they go for it. It just shows, again, the power of lots of small things is not to be underestimated. The power of the masses. If that's, the community movements, community groups, small donations, whatever. When you can mobilise the population, you get some action.
And there was that lovely quote from Mark Collette on Energy Australia, speaking with Origin's Frank Calabria, just was saying, talking about sort of that growth in community energy resources, saying, we're going to have to think about this. Indeed.
I can remember, Giles, and it's I shouldn't be doing this looking back into the past, but I can remember sitting on an IPART panel with Frank Calabria years and years and years ago, and me presenting a case for batteries, which that was well before any Tesla Powerwalls were introduced. Not that long before, but it was. And I think Frank said to me afterwards, that's an interesting idea, David. I'll look at that. And you know what? He's the sort of person that does look at it. He does listen, and he takes his ideas seriously.
Well, he does. He's just got this massive sort of ship that he's trying to sort of steer around the place, and it's, hard to do. Can't say I know how to do it, but there you go.
Well, Giles, what else have we got for the day?
I think that's about it, David. It's Saturday night, and we're going to have, it's going to be another twofer this week, because we missed out a week because we had to had an embargo on the CFC thing we had last week. We had Ian Learmonth, and then we followed that up with Jill Shah and Kane Thornton at the and the report from the Clean Energy Summit. So today we're putting out the Acacia one, and then by the end of the week, we hope to do a report on the Nelson Review, which should be coming out this week. But I guess with all those things, it's wait and see. So don't be surprised if another one of these wonderful podcast lands in your inbox.
So far, it's not going to be a news drought, is it? Or a wind and solar drought. It's going to be all systems go, Giles. And guess who's going to be here? You'll be the one analysing and talking about it. So isn't that good? Something to look forward to for all of us.
I'd actually like to go for a nice long surf, but haven't been able to do that for a while. But anyway, that's another matter. David, thank you very much for joining us. Thank you to Nick Carter from Acacia Energy. Been looking forward to that interview for a long time. It was really interesting. Thanks, of course, to our sponsors, Evergen and Pylon. Thanks to all the people who came up and said hello at the Clean Energy Summit, and even a couple of people who bumped into me going across the bridge said, just love your podcast, keep going. And that was great. So thanks from me and David. Bye for now, and we'll be back with another podcast quite soon. Goodbye.
Energy Insiders was brought to you by Evergen, the market-leading renewable energy software business that optimises residential and commercial solar and battery systems. Evergen enables large numbers of systems to operate as a single fleet, so network operators can use them as a virtual power plant, generating significant value for consumers, network operators, and the energy system as a whole. Evergen software is powering the energy system of the future. Energy Insiders was also brought to you by Pylon. Pylon provides easy-to-use solar design software for installers and retailers with pay-as-you-go pricing, no monthly cost and no lock-in contracts. Join Australia's top solar companies who trust Pylon to design high-resolution, CEC-ready solar proposals.